All right, everybody, welcome to the DealGen podcast, where we talk to investors, entrepreneurs, and business titans about a wide range of topics and experiences. The DealGen podcast is brought to you by DealGen Partners. DealGen Partners is the leading deal origination service on the market for private equity buyers. DealGen Partners combines their M&A and private equity experience with a proprietary method of multi-channel marketing services that they call the Bird Dog. This unique recipe generates transaction-ready deals at an unmatched pace and increases a private equity fund's chances of closing a deal by up to 10x. Reach out to DealGen Partners before you begin searching for your next investment. All right, in this episode of the DealGen podcast, we had John Danowski and Ethan Liu of Pheonix Strategy Group. Pheonix Strategy Group is a startup advisory and investment bank that helps entrepreneurs turn their ideas into successful businesses. They offer a range of services, including market research, financial modeling, and business plan development to help founders create a strong foundation for their companies. So it was a great conversation with John and Ethan. You guys are going to really enjoy this one. We get into the fact that a lot of businesses go out for sale or for investment without having their financial data and their unit economics known, and without really knowing exactly, what they make on a yearly basis and on a transaction basis. It's hard to go out and raise money, and then once you do raise money without knowing this relevant information, you might start growing too fast and expanding too quickly and running out of money before you even hit the ground running. So this is a great conversation. I'm looking forward to you guys to checking this out. John and Ethan, here we go. We're live here, boys. Good to have you guys on. I'm glad we could do this and get this scheduled, and it's a pleasure to be on the show with both of you. So Ethan and John here from Pheonix Strategy Group. I'd love to, before we dive into some of the questions I have for you guys, I'd love to hear just a little bit about what you guys do together and how you became partners and how that partnership formed.
Yeah, I can kick us off, Ethan. So I'm an electrical engineer with a master's in electrical engineering, and I became a startup CFO after September 11th, 2001. And since then, 5 out of 5 of my full-time jobs as a CFO have taken companies from single digits to 100 million in revenue.
Wow.
Companies like Second Life and General Assembly, and then most recently, I invented a way to lend money against the inventory of emerging consumer brands and was a co-founder of Assembled Brands. So there we have $100 million fund that lends money against the inventory and receivables. It's an asset-backed lender for direct-to-consumer businesses, primarily on Shopify. While I was working in that area, I was spending a lot of time on LinkedIn, and I connected with Ethan Liu and our other partner, David Metzler,
Yep.
who are also out of San Diego here, and they had built CBD Capital Group, and they were acquiring and investing in emerging consumer brands that were bringing CBD to the market and providing all the health benefits of that. At that point, so I brought in my methodology, which I call integrated financial modeling. And I brought that to Ethan and David. And I just watched Ethan, and Ethan was the fastest person to ever pick it up, use it on his own, and then beginning providing CFO services on his own. So then that was the first time we started working together. Then I just started bringing Ethan and David in on some of the companies that I work with. I now run a company called Weekly Accounting. We do accounting for all your business data. And I brought Ethan in. He's, in addition to being a super strategic human being, he's also like what I call a data ninja. And the things he can do with HubSpot are amazing. So we've been able to we found a way. Pheonix Strategy Group is really our goal was to make money with friends, and that's been our guiding ethos since the beginning. And we've just been having a lot of fun with it.
Hey, that's great. No, I mean, it sounds like, all of you guys come from successful backgrounds, right? And you have strengths in different areas, but also, like you mentioned, Ethan was able to pick up some of the stuff that you brought in right away. So you have, you're able to share in some of those strengths and teach each other, the different tactics that you've used to be successful in your past and in some of your other business ventures. So, some of the questions I have for you guys is, at Pheonix, it seems as though you guys help existing businesses, either prepare themselves for sale or get their financials together. But what are some of the top challenges that in doing so are helping entrepreneurs solve? Because what are many of them coming to you for?
Yeah. So the first thing is that people like I think the existing venture capital industry has sort of trained people to think they need to raise money first, and then I think the sort of the service providers, the CPAs, the investment bankers, they are really primarily focused on the much bigger companies. And I have always in my career worked with just small companies getting started on QuickBooks with maybe a startup business engineering project that we call it. And so just bringing the understanding of data from all the business applications that small businesses are using today is where we add the most value. I think there's I say things like a CPA is licensed to do your books in a way that doesn't help the business. As sort of engineers and data ninjas, we come in and instrument the business perfectly. And when you instrument the business perfectly, I say things like once you put the right data in front of an empowered team, they get better. And we've just seen this over and over and over. I say things like a CPA is a license to do your books in a way that doesn't help the business. And that's because CPAs are more focused on tax and compliance than they are on the data that runs your business. And they're certainly not focused on your customer acquisition cost and your lifetime value. And you have to have positive unit economics if you want to have a chance of raising money.
Gotcha. So completely understand. I mean, I work with, in working in my line of business, working with investment bankers and, VCs all the time. And we do see the differences in, where they're looking to get involved in companies and what their focus is on. And, oftentimes we'll see, again, with some of these smaller companies, them not even really wanting, from a banker standpoint, if they do get involved with a smaller company, it's not their focus. It's, it's certainly not something that they're just basically trying to, get this thing across the finish line, collect their commission and go home. And while they're working on, many bigger opportunities. So it stinks because, the entrepreneur that hired them on to get this transaction to be successful is now the one that's suffering from, just a lack of communication, a lack of really willingness to help. And so I completely understand where you guys are coming into the picture and, preparing these entrepreneurs for not only while they're operating their business, but so that when, if they want to exit in the near future or in the future at all, they're gathering up all that data right now so that that process becomes a lot more seamless as they
Yeah.
enter into that
And
transaction phase.
Yeah, I think traditional bankers. I used to be an investment banker very early in my career at Greif and Company. Lloyd Greif sponsored the entrepreneurship program at USC, and he's a fabulous banker. But the minimum fees for most bankers is $500,000 to $2 million.
Right.
For a bulge bracket firm. And what I found in working with small businesses for my entire career is that they're poorly served by their bookkeepers. They're already paying for this kind of bookkeeping, and we can build a really long-term relationship helping them at the ground level and help them accomplish their goals, whatever they are. Not every business is going to be a venture-backed company. Not every business is going to kind of exit, and so we're helping both lifestyle businesses and venture backed companies. And we're not just in it for the fee. We're in it to help these companies for the long run. And in a lot of cases, we're working with founders for the second and third time at their next companies as well, because of how we work and how effective we are.
Makes a lot of sense. So, I mean, outside of, I completely understand you guys' specification on the financials and the bookkeeping and stuff like that. But it seems as though you're both also investors into businesses, have run your own, helped run your own companies and seen the ins and outs of many startups. Um, where do you see most businesses, in that early stage, call it, pre $2 million of revenue, fail? Where do they, what is the challenges that lead to them having to either turn the lights off or have kind of a fire sale, if you will, at that early stage?
I'll speak from just personal experience, and I see it all the time, and I've made the mistake myself. The number one thing that I think goes wrong especially when you bring in capital, is you scale too early. You scale before you have, high quality operations. You scale before you've instrumented every role in the company. You and then what happens is what started out as something that worked when the founder did it, and then when the initial small team did it, that 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 can be easily managed. But then once you start to grow the team, now you've got this big burn, and you've got all these big expectations, and then it's just easy to kind of just burn a lot of money, imagining that the magic cohort, that this 10% of the customers that have positive unit economics, that's your business, and it's not. Your whole business is your whole business.
That's great advice. It really is because, a lot of people, just the modern Silicon Valley mind is to go out and raise money, and they do so before they even have a product market fit. I've seen it. I've seen it plenty of times where, like you said, they don't know their whole business. It might be entire chunks that they're still trying to work out, but they're growing so fast that they don't even have time to put those together. We did an exercise recently where, it went through the different components of a company, and there, I believe it was VAOE was the acronym when used, and it was visionary, operator, architect, and executor. And many entrepreneurs are the V and the E. They see
Mm-hmm.
something, they have this big grand picture plan, and then they just leap off a cliff and try to execute it. And they don't do the operations and the architecture in the middle that, is 1000% required in order to scale. And so when you have a V and an E and you give them a bunch of money, and they don't have the O and the A built out, nor do they value the O and the A, because it's not how they think, then I feel like it's just a recipe for disaster.
I agree, and I have a little saying about that. So part of our ethos is that we believe that big visions and positive unit economics can change the world. And in my experience, I think it's the only thing that can. And so I'm a sort of a sucker for big visions. Second Life's big vision was to connect everyone to an online world that improves the human condition. General Assembly's vision was a global community of individuals empowered to pursue the work they love. And say what you want about Elon Musk, but I love the vision of Tesla, which is to accelerate humanity's transition to sustainable energy. And so that's why it's all of these things, the way professionals behave with small businesses like CPAs and investment bankers, and then also the way VCs behave. They are winner take all. They're looking for $1 billion markets or bust. And most businesses don't work that way. Most businesses are not venture scale. And that doesn't mean that most businesses are bad. It just means that VCs aren't a good investor for most businesses.
Yep.
And that just leaves like a huge opportunity. And that's why we say we're reinventing venture financing for the 21st century. My first experience doing that was at Assembled Brands, building a $100 million fund, investing against the inventory of emerging consumer brands. But that's what we want to do with Pheonix Strategy Group, is to get to know lots and lots of businesses just by doing the basic bookkeeping and things like that. Like if they have a bookkeeper, we can definitely do a better job than their basic bookkeeper for the same price and provide a hell of a lot more value. And then at the end of the day, we've built a portfolio of companies, and the cream always rises to the top. And those are the companies that we've had long-term relationships with. General Assembly was a good example. I met them in 2011. We instrumented the business with Monday Morning Metrics in 2013. They just had a couple $1 million of revenue at that point. They were running out of money in 30 days. And fast forward 4 years later, we sold it to Adecco for over $420 million. And it's because we instrumented the business at every level. We instrumented the level 2 marketing metrics. We instrumented the sales metrics, or the of the onboarding team. We instrument every single role in the company so that they're all aligned on achieving the goals, the detailed metrics that are required to achieve the big vision. And so in all the cases where I've taken companies from $100 million from kind of single digits to $100 million, it's always been getting positive unit economics and then aligning that with the big vision. So, and like at Second Life, that meant we raised prices 50% like right away. And then at General Assembly, that meant driving every campus to contribution positive. And it's this kind of thinking, you know, you raise a lot of money, you think you can burn a lot of money for a long time, and the reality is you can't and you shouldn't. And a lot of times when I work with companies that have raised 30-40 million dollars, you know, in a series B or something like that, they've sometimes they sort of stretch their numbers a little bit, and then they're afraid to sort of be honest with their investors after the deal's done. And that to me is always a recipe for disaster.
Oh
The
yeah.
Everybody has to be on the same page from the frontline worker to the board, and if they're not, the company's not going to be successful.
Yeah, yeah. I've seen it firsthand too, where, as soon as that, like, untrustworthiness or, lack of communication or, nervousness about communication starts to creep in, that's where big problems start to happen. And I think that, I mean, you guys can be an entrepreneur's best friend, and I can see you've proven it before, but I can see it, now that you explain it a little bit deeper, is that, many people are out there, these visionaries, these executors, these people who can come up with an idea and then they can go sell it. Um, they're missing that unit economics, they're missing that middle piece. And, that to me, combined with the right vision, like you said, is really everything you need. And then, if you have a motivated, driven leader who's spearheading the charge, and they know the metrics that they need to measure. Everybody in the company knows the metrics that they need to be that are being measured and why they're being measured. And you can, like you said, you do the Monday morning metrics. Every Monday you can evaluate what's going on within the business and look at where, you know, what parts are healthy, what parts are unhealthy. How do we make those parts that are unhealthy, match the healthy parts, or do we just cut them out altogether? And that's where there's just there's a lot to be said about what you just talked about. And there's, the strategy component, the architecture, the building it out the right way, and then letting the visionary and the executor do their thing is I think how things get done. And then maybe injecting money once the whole process is aligned, people have figured out again what to measure and why. That's where I
Yeah.
feel like where the right, and it has to be the right money too. You can't just go raise money from any VC or raise money from anybody that, is willing to give it to you.
Yeah.
I think that's insane. I think you have to go out and raise the right money, strategic money
And
that can help you execute.
this is a spectrum that we talk about a lot with the earliest stage companies. So when before you have your unit economics dialed in,
Hmm.
you're really only going to be able to raise money from people who know you or people who know you, because you're telling a story, and this is a story about a business that doesn't exist, that doesn't have metrics, and that's going to take that's where friends and family come in, or you're bootstrapping it yourself. We built Pheonix Strategy Group and weekly accounting simply by bootstrapping it ourselves, and that's nice because now we have full control of a profitable business, which means that's our positive unit economics. It keeps the team engaged, keeps the attention of the team, and then that just means we can tell the biggest vision we want to tell, because we don't have to worry about bringing in money. So those are two paths at the earliest stages. As you mature and as you start to dial in, like doing a startup business engineering project, and you start to dial in the trends in customer acquisition cost and lifetime value. One thing I do for every company at Assemble Brands that applies for capital is I look at all the ad spend they've ever spent, their cumulative ad spend in their lifetime. And then we look at all their cumulative first time customers that they've ever had. And that's a number that says this is it, like maybe you spent $3 million to acquire 70,000 customers. And that means it's cost you, I don't know, it's about $45 a customer to acquire them. That's a number that can't lie. That's a number that you can't fudge.
Right.
And I don't think most VCs and investors are doing diligence at the level that we're able to. Certainly at Assemble Brands, we're connected to their QuickBooks, we're connected to their Shopify, we're connected to their bank account. And most VCs can't do that because they fear that in the competitive deals they won't be able to request that.
Sure.
And that's why we say we're reinventing venture financing, because one, I don't think every business has to be quote unquote venture scale to deserve capital. And I think we say part of our ethos is we always bring data to the conversation. And I think making investments without the kind of data infrastructure, integrated financial modeling, and Monday morning metrics that we build, I think that's just gambling.
Yeah, I think it is too. I think it is too. And isn't that a shame that it's pretty backwards that you mentioned venture capitalists um, aren't collecting that data, aren't asking for that data, aren't even acknowledging that it's important before they're trying to lend money just because the competitive deals. So they're
There's
they're
a
they're not even acknowledging that it's an important thing for the business to have, and be aligned and have those metrics in front of them, because it's like, well, if we don't jump on this right this second, then someone else is going to jump on it and they're going to make all this money. And I don't know. I mean, you can poke so many holes in that ideology.
Yeah, and I've seen it just recently in the both two companies in the past 2 years. Well, we've raised companies we've working with have raised over $200 million in the last 24 months, and we've raised over 50, 60 million in the last 6 months, even in this market. That's as if to highlight that if you have good unit economics, you're always going to be able to raise capital, and if you don't, then you've got to restructure the business. But in two of the cases where they've raised between 30 and $50 million, there were things that we had to tell the investor after they invested that they just didn't pick up during the diligence. Having negative gross margins is just not a good look for a business. And so, when you see investors investing, when you see VCs missing negative gross margins while they're doing diligence, it's shocking to me how little they respond to data. And that's really where we want to bring the world class capabilities with data to the smallest of small businesses. We firmly believe that the nature of work is completely changing. There's going to be people like me who have been a CFO at individual companies. I'm with the tools that are out there, and with offshore talent, and by building systems, and with all the right data tools, the productivity that somebody like me and somebody like Ethan can achieve with all these tools is like off the charts compared to where it was when I started my career and didn't even have an email address. And I think there's going to be a lot of people left behind, people who are not adapting to new technologies. And that's the other part of what we're building with both Pheonix Strategy Group and Weekly Accounting is we are the experts in getting data from every application, no matter what it is, whether there's an ETL tool for it or not, and then using that data to align the frontline workers with the vision of the investors and the management team.
I love it. Yeah. No, I mean, you touch on a lot of things there. And I think that, what you guys are building out, the vision for what you have is, is just going to be so much more valuable. It's going to allow you guys and maybe investors, and if you guys end up raising a fund or you already have a fund, future investors to be confident that the things they're being invested in, where their money is going, is into companies that you guys have a tremendous amount of data on, everything about, and that you're approaching it the right way, not just trying to meet a mandate and get their capital into the market, into big name blue chip type of uh venture capital type investment companies and strategies. So one thing I wanted to ask you about is, with sorry, remind me of the company that lends to e-commerce.
That's Assembled Brands.
Assemble Brands. So something that's obviously being talked about a lot, yeah, lately, or at least it has been for the last years, is the supply chain. Um, what's going on with containers being on the ocean, people not being able to get goods, or people paying way more than they're used to paying for certain products, uh, companies moving from their assembly and their manufacturing from China to other parts of the world like Mexico and maybe even the US. So what with all that going on, we don't need to get into why it's happening or anything like that, but how has that affected Assemble Brands? How is that, if are they still able to, as effectively borrow against maybe goods that are taking much longer to get here or much more expensive than they were before?
Well, that's a good question. It's interesting. The brands that we work with, range from probably 5 million to 70 or 80 million in revenue.
Yep.
And I'll just back up and say that originally Assemble Brands was making equity investments in individual brands, and one of the most successful brands, like luxury retail apparel brands, it was founded by Adam Pritzker and Kate Holstein. Is Kate, and KHAITE.com. It's a luxury denim and knit brand, and it's just exploded. And watching that happen, it was during that process while Kate was growing that I went out and looked for working capital. And I literally had to buy a fax machine to communicate with the factoring industry. And the factoring industry was used to just lending retailers money against their receivable, or lending against the fact that Target will pay somebody, pay one of these brands in the future. And these factors just wouldn't touch that direct to consumer inventory. And that's where we just saw the huge opportunity. In terms of like what the Assemble Brands does and not lend money against inventory that it can't, sort of see and touch. So the inventory needs to be at a warehouse or a fulfillment center in order for us to lend against it. That said, most of the companies we work with didn't struggle with during, kind of when a lot of the bigger brands were struggling with supply chains. Like I think chips was a big area, and we don't really have any companies that were selling electronics or anything like that. And then even the companies, one of the bigger companies that we work with is called Playology. It has scented dog toys
Sure.
and they are all made in China. And that company, it sells primarily through Petco. And your dogs love it. It ends up being the toy that they smell around for and then find, and they keep using, 6, 7, 8 months later. And that one did, like, Chinese New Year is always an issue, and COVID in China has slowed things down a little bit. And so yeah, so then that you do have to carry more inventory in those cases, and so you can weather those kinds of storms. But in the smaller brands can usually get away with it. And honestly, sometimes running out of a product can be a marketing event as well. And so
Sure.
and I've seen brands do really well with that too.
Yeah, no, it makes all the sense in the world. I mean, you see it on, certain companies that I buy stuff from all the time where they're like, "Oh, this is unavailable right now." But, they let you know maybe when it's coming back. They give you that update. They get everybody all jacked up, and, they hit you with those weekly, monthly newsletters saying, "Hey, this product's going to be back in stock in so and so time." And then as soon as you launch it, you get this big influx of. So again, back to strategy. I mean, if you handle a situation like that the right way, you can turn a negative into a positive, which I think
Always.
the best entrepreneurs are great at. So I have a couple, outside the box question for you guys. My first one is, what's the first investment you've ever made? And this could be into a company, or this could be something that you bought into, invested in yourself. But I always love to hear these types of stories.
This is so I will say the longest job I've ever had is my paper route. I delivered newspapers as a paper boy from when I was 12 until 18. And I learned how to program on an Apple II Plus back in 1982, when, like, the Rubik's Cube just became popular. And I wrote a program to solve the Rubik's Cube. Something crazy I probably couldn't do again today. But back then, there was, on an Apple II Plus, you had a simple word processor, but there was no spell checker. So the 13-year-old John Zanowski typed in a dictionary and built a spell checker, and then invested $100 to get it into Apple's Soft Talk magazine. And it was, I was excited about it, the whole thing. The ad's going to show, and I'm going to have my first business at 13 years old. And Soft Talk magazine shut down, and I lost my $100, and the magazine never published.
Oh no.
So obviously that wasn't a big loss, but I was thinking about that as the first investment I've ever made. Ethan, how about you? You there?
I'm here. Yeah, the first investment I ever made, it probably has to date back to my family office day, which is a more real estate focused type of investment. But there's nothing interesting there. But my very first interesting investment is really it's on Angeles on East. So this is back in I think 2012 or 11 when Angeles just started it. And my friend was telling me, hey, there's like a weed delivery service that we can make investment into. And so we were one of the very first people that invest in syndicate on Angeles, because I believe East was one of the very first couple investment that Angeles debut, and that ended up to be like a 15x return. So
Wow.
that was pretty
There
good.
you go. That's a little bit different than
Yeah.
John's way. He lost his $100, and he had to come back and and figure out, hey, do I want to keep investing? Is this something that people do? That's, but hey, it looks like you've made a career out of it at this point, and good for you, Ethan, for kind of looking into the future there and seeing that
Yeah,
this is
and
gonna be
John,
this is gonna be a big thing. What were you saying?
no, I said John killed it too.
So last question for you guys before I let you go is, it's funny that you mentioned $100. That wasn't a recent transaction though. What's something that you guys have bought for under $100 recently that ended up being something that was very worthwhile and useful to you? It's hard to pay under $100 for anything right now.
And I'll just plug one of the tools that we use pretty regularly. So at, a lot of times, just as a CFO or working as a controller or in a finance department, you're exporting data from QuickBooks, and then you're importing it into a spreadsheet. And so for the first probably 16 17 years of my career, we had to do that. And so when we use a tool called coupler.io, and you connect Coupler between QuickBooks and Google Sheets, and then you can make a change in QuickBooks and it just shows up in your Google Sheets. And so that's $100 a month, and it just saves me so much time.
Nice.
I'm not related to that company at all, but anybody who's using QuickBooks Online should be using Coupler, and it just saves so much time.
That's a good plug. I like it. Ethan, what about you? You bought anything recently for $100
Yeah,
that was a big
yeah.
difference?
I have a pretty interesting story about $100. So this is something that I've been doing for the past, I would say, 10 years. So my first boss my first job at the family office. Basically, the first or second day I walk into the office, he was trying to teach me about inflation rate. They was like, okay, when you leave the office today, after that, go to the supermarket, buy 100 items that cost $1, right? And then every single year, he just tell me basically go back to buy the same thing and to see how much that costs now. And that's like the real way to measure inflation rate. So I've been doing that for the past 10 years.
Really?
Basically, I have a receipt of things. I can just keep going back and, buy stuff. And, like based on my measurement, inflation rate, the true inflation rate should be somewhere between 7 to 10% per year. So
Wow.
that's just my finding.
Look at you.
Yeah.
That's great. That's a pretty worthwhile lesson. That's a good way to teach somebody about just economics in general, very simple way. So you'll go back and buy the exact same items?
Yeah, I have a list of items,
What do
like
you
100 items.
what are you spending today? Any idea?
It's probably about like 140, 150 bucks. So
Yeah. No, I mean that's a pretty, significant increase though at the end of the day. Well, this has been great,
exactly.
guys. I really appreciate you guys coming on here. I think that a lot of what we talked about is very important, especially for people who are starting companies and running companies that maybe are you know not haven't reached maturity yet. They're looking for investment, or maybe they've just grown organically, and they're looking to get ready for an M&A transaction. It doesn't matter. The same things apply. You need to know your unit economics. You need to know, the data within your financials in order to have any of these things truly be as successful as they should be. Maximize the amount of money you can get in an M&A transaction, or maximize the amount of money that you can raise, or who you're raising that money from, that you can convincingly, bring an opportunity to them, have them see your vision. All these things are really important in what you guys are solving at Pheonix. Um, I think anybody out there that's listening too, that's looking to start raising money, or looking, maybe you're an entrepreneur who's, has an exit in their near future. Definitely reach out to you guys, and I'll make sure that we plug in, a way to find you guys after the show wraps up.
Yeah. So you can find that on Pheonix Strategy Group. And we start every relationship with a gift. Thank you for having us on the show. That's wonderful. And our gift to anybody who's listening in your audience is that we'd be happy to build them a weekly data warehouse and a an integrated financial model from their QuickBooks data. So if they apply on Pheonix Strategy Group, we can usually takes about a week for us to do that. We'd be happy to sit there and talk with them about their business and help out in any way that we can.
That's
And
awesome.
that's that we seek win-win relationships, and we start with a gift.
That's tremendous. I really like that. I like it a lot. Well, thank you guys very much. I appreciate your time, and God bless, and looking forward to staying in touch here.
Thank you.